Welcome back, everybody. Sive was here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So in general, you can see the gold market reaction on the payrolls, well, very slow, very weak compared to the forex market and euro currency in particular. So just a few minutes ago, we talked about euro currency in the first video for this day, and this is a really good sign. So market is calling near the top, forming the tight consolidation. Yes, we see some spikes to the upside that might indicate some additional sellers pressure or just not high activity of the buyers in the current circumstances, but this is quite understandable. For a gold market, I would say that the decision of the Bank of Japan, and I suppose that even the comments from the Bank of Japan, might be more important than the report on the job market. Why? Because rising of the rate to the 75 basis point by the Bank of Japan, it is a well-known fact. So market is preparing for this decision. But what does it mean to the gold and actually for the other assets? I already talked about this briefly in the Bitcoin video on Monday. Because the Bitcoin will be the great loser or beneficiary of the change in the rate. More particularly, probably the loser rather than beneficiary. But anyway, what does it mean? It means that a result of the carry trade will diminish. So difference between the rates will drop. Yes, it might be will not lead and probably will not lead to the massive closing of the carry trades. But what does it mean for the portfolio investors? As you know, the portfolio investment is not just about the return, it's also about the risk. And when you're putting the money in some assets with some particular risk level, which means volatility, say hi to the Bitcoin again, so it means that when the profit of the carry will decrease with the same amount of the risk on the same assets, this combination becomes less attractive. What does it mean? It means that the new parameters of this trade, when you get the return on the carry and invest in some markets with a predefined and known volatility, it means that the value in the portfolio should be corrected. So it should be decreased to the new parameters of the system, right? So it's obvious. And that could really trigger some rebalancing of the portfolios of the investors. So reducing some positions in highly volatile assets, some maybe decreasing some stocks in portfolio or something like this, which could really bring some chaos and volatility in the short term on the currency market and particular on some domestic markets, including Japan itself. And the gold, as a part of all these portfolios, might also be the victim of this rebalancing, not because the change of the interest rates by the Bank of Japan will directly strike the gold, but just because of some liquidity manipulations with the United States dollar and so on. It could touch the gold market as well. So from that standpoint of view, in the near couple of sessions today, tomorrow, I would be careful with making decision on the gold market. So it will not based on some fundamentals or valuation of the gold. It just might be the technical byproduct of the rebalancing of the portfolios of investors due to the changing of the interest rates between the yen and the United States dollar. That's the reason why I probably will be careful with the current situation. So although this might be treating it as a good sign that market stands tight near the top, on lower time frames, actually on a 4 time frame chart picture also hasn't changed significantly. Here we do not have any grabbers. I have checked on the futures market as well. So although MACD lines are crossing here, there is no grabber here. So market stands still tight. But in the current circumstances, I prefer to wait a bit and see what will happen. If everything will go well, and we will not have a big volatility from the Bank of Japan, probably market should stay inside of the predefined triangle. So currently we see that this triangle is getting more shape, as we mentioned it yesterday. With this upward swing here, it's just confirmed the trend line, which is really great. And this definitely could be treated as a bullish pattern. But taking into consideration common important events, I prefer to see the market will stay inside of it for longer and maybe that's also could give chance to take the position somewhere closer to the border of the triangle. In most worst, in a worst case scenario, it might be kind of the butterfly to the downside with extension, this ABCD pattern as well, retesting of this long-term trend line, which is actually triangle on a daily chart, and we could get the position somewhere around 42.50 if everything will go on a bad way. I mean bad way, of course, for overall reaction from on the Bank of Japan decision and the comments that they will make. But if market will stay here and we appear in the moment after the Bank of Japan, market will remain in a triangle. That will be another chance to consider possible position taking. Besides, maybe on the daily chart at this moment, within 2 sessions, we also could get grabber based on the volatility that could come. So taking it all stuff together, I see that currently to wait a bit and see what will happen. Besides, Bank of Japan will comment in the morning or by the European Central Time, so because of the actually time difference. So in fact, tomorrow in the morning we already will be know everything about it and see where gold will be. For me, this is a bit outcome the possible chances for immediate taking position and carry all these risks that probably could come from the Bank of Japan. That's in 2 words what we have in the gold. As a bottom line, we have the bullish context. Triangle is really great, but just to avoid unnecessary risk, it would be better to wait at least until tomorrow morning and see what will happen.